Alright guys, here's a clean setup I spotted recently in the pre-market hours and executed it actually after the opening bell that in my view suggested a demand side bias. Now as you can see we are looking at a 2-minute time frame here, capturing a swing low to swing high here that obviously forms this immediate range. What initially caught my attention was the sharp drop following a break of the base in this distribution segment. The market then, as you can see, it drops about 120 points or so lower, breaking through this low near the 137 level. Now, it goes without saying that this setup presented a clear sign of overextension, more importantly with no relief rally for over an hour, indicating this way a strong acceleration in the downtrend. Now I should point out that this type of setups are all about finding that exhaustion point, which in this case appeared in the form of a hammer candlestick. The hammer tells a clear story, obviously here, which is sellers pushed hard to drive prices down, but buyers stepped in, closing the candle near its high. This pattern obviously signals a potential reversal, adding to the strength of this thought process here, or this setup rather, is the hammer's long lower wick, which forms this sell rate here, or a final attempt by shorts that confirms a possible bottom in this decline. However, I say potential reversal because further confirmation is still essential. In fact, this confirmation came as price kept printing higher lows over here, while respecting at the same time the break of structure above the 140 level, which suggested that the downtrend was losing momentum and that a reversal may be taking shape. And again, here I say may be taking shape because I still want to see how price reacts if the imbalance zone around the 190 level here is filled. And this, as I always stress, guys, is where the importance of not forcing trades come in. Meaning, you literally must have the patience of a saint when it comes to waiting for that high probability setup to fully reveal itself. So after the imbalance zone is filled, the price, as you can see, retraces actually 3 times to the downside, with market makers clearly engaging in further price discovery around the 160 support level. Notice, however, how this grinding sort of corrective phase fails to generate a lower low in the context of the 160 support level. From here, the price bounces, but more importantly, breaks formation or structure, the same concept, above the 174 level, a sign in my view that market makers are done reassessing the price delivery and are likely at this point targeting these cluster of bearish order blocks up here. That's why I placed my long entry around the 175 area and even added, as you can see, a contract on the way up, since I was sure that this manipulation down, involving again these sequential mini retracements, was simply a pause within a larger uptrend. As you can see, the market pushes right through these order block levels I just mentioned, confirming this way that my bias on this trade was a correct one. By the way, guys, if you are digging these price action trades and want to see more, don't forget to check out this next video. Alright gang, thanks for watching, and as always, hope to catch you all in the next one.